Hello traders, Gary Wagner with Trending Markets on Thursday, March the 3rd, 2016, approximately 11 o'clock in Hawaii, 4 o'clock in New York. And as you can see, equities have markets have closed for the day and closed positive to the upside. And we have seen this market really move to some new ground and find support in certain areas. Of course, we are looking right now at the Dow Jones trading up 44 points, 16,943. It's had a low of 16,820. And we have closed very near the high at about 944 on the day. When we take a look at the Standard & Poor's 500, this of course is vis-a-vis the E-mini. We're currently trading at 1991, up about 7 points on the day. We of course did enter a long position in this market both yesterday and the day before. Soft call the day before on Monday, hard call on yesterday. We'll talk about that all on today's Trending Markets. So traders, I do want to start today's show by taking a look at a Standard & Poor's E-mini contract. Of course, this E-mini contract is a daily contract in terms of daily candlesticks, and we're looking at the market currently settling, and it will go into Globex after hours, but trading roughly at 1990. If you recall from yesterday's show and the day before, on Monday, we put out a soft recommendation. What I mean by soft recommendation is I didn't put it in writing, although I said it during the show, to initiate a long position in the Standard & Poor's vis-a-vis the E-mini as long as the market opened up positive. That's what we said, because what we had seen is many positive moves in the market. Let me get my pointer here, but what we saw were many positive moves in the market that gave us the conviction to get in, but that would be followed by a sell-off. You saw that here, you also saw that here. And so we had these tentative calls that never really actualized. Now, what frustrated me, to be honest with you, is as this market moved up, once it broke above, because our kind of line in the sand to where we wanted to genuinely get in was when we saw this market break above these tops and talk about the 50-day moving average to actually break above the 50-day. We have our 50-day, and here we have our 200-day. So the market did open up, and it opened higher, and I put out a conditional trade alert. Go ahead, get long as the market opens up firmer. It, in fact, did not. It opened softly. That's why you have this red candle below the body of the green candle here, and we had this shooting star. That was followed really by follow-through, in which we saw the market break below this particular line, 1937, which is a 61% retracement of the August meltdown. But, and this is what was important to me, we broke below that. We also broke below our 50-day moving average here and closed below that. And that to me was really significant. So we didn't take a stab. But then, lo and behold, this is Monday. We have the tremendous market move up, and it meets all of our criteria. In other words, it's above our 50-day moving average. It's above 1937. It's really everywhere we want to be, except a little bit higher than I had hoped to get in on it because of our target levels and our exit strategy, which we'll talk about in a few seconds. But so we actually made the call, and so traders, we're in at roughly 1979. Our stops are below 65 in the market. Market's currently trading around 90. First of all, traders, I recommend that you maintain your current long position and maintain your current stop. Your stops are sitting below this 50% point, which is 1970. So ours is below 65, which is this particular low, I believe, of the day. That's why I would have put it there. I would have put it below a low of the day. We do have a higher low today. That's a good sign. We have a higher high. Market's trading at around 1990. And so for that reason, we will maintain this position. But the way the gold is moving right now, I'm surprised that we had really some brilliance in the equities markets and the kind of move that we saw sustained in gold. And a lot of that, traders, a lot of that has to do with the dollar, because the dollar today was really down, almost a full 0.75%, 0.69 at 97.54 under tremendous pressure, breaking through a couple of key levels, and the real key level that I'm looking at is about 98, because 98, and traders have been with me for a while, know that we have this long-standing level of support that we're looking at around 98. You can see that in here as the market went up, and a long-standing area of resistance at about 100. But we definitively broke through this point, and the next real strong or solid level of support, technically based that is, of course, technically based that is, doesn't come in until around 96.50 in that area. This has been Gary Wagner. Maintain your current S&P position, maintain your stop, maintain your current long gold, maintain your current stop in gold. Wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.